Hello and welcome to another episode of Business and Bubble Tea. Here on the podcast today, we have with us Phillip An, the co-founder of Homebase. Phillip, it's a pleasure to have you on Business and Bubble Tea with us today.
Awesome. Yeah. Thanks for having me, guys. Really happy to be here.
Welcome, Phillip. And let's start with a brief introduction of yourself and maybe how did you get to the creation of Homebase?
Yeah, for sure. My name is Phillip. I'm the co-founder and COO of this company called Homebase. I'm mostly from the United States, but have lived and operated across Southeast Asia and Singapore and Vietnam the past several years. So my co-founder and I, we founded this company Homebase in 2019, just based on a real market need. So for him, he was actually in the process of buying a home himself, and in Southeast Asia, especially, home financing is very hard to access. So when he went to traditional banks and tried to get a bank loan, it was very difficult for him. So honestly, we just started with this question of how can we solve our own problems? And after talking to hundreds of consumers across Southeast Asia, across Vietnam, we realized that a lot of people had the same issue where, if you want to buy a home, it's very hard to get and access property financing. So we just took that solution and found a lot of mentors in terms of existing companies that have been doing this in more established markets in the world, and then just ran with it. Yeah.
And how was this like a major problem? Like what was because obviously I guess in the UK, home financing is a pretty well established space. Why do you think that's the case in the SEA region?
Yeah, of course. I think there's several issues, right? So, for example, the access to home financing in itself is quite new as a concept, right? In a country like Vietnam, historically people actually bought homes using cash, right? But when you have a market that's appreciating when you have a market that's appreciating like 10 to 15% every single year, just prices get really expensive. So now people basically don't have enough money to actually buy it in cash. And because of the fundamental kind of infrastructure and where the market is in terms of the global macro economy, we don't have a centralized kind of data system here, right? We don't have a centralized property tax system. And even pricing is very hard to actually nail down. Valuations are very hard to nail down. And same thing on the credit side as well, right? For consumers, there's no credit scoring system as well. So that's why also credit providers like banks or other traditional institutions are a little bit more strict when it comes to criteria because they're worried about defaults or worried about customers going wrong. And then I think the last thing is just because of where the credit markets are, in a country like Southeast Asia or in Vietnam especially, international investors are less likely to deploy capital because markets are more volatile, more risky. So when you do have traditional loans, you have stuff like you have to put 40 or 50% down in the beginning when you're buying a home, right? And then interest rates right now could be anywhere between 12 to 14% a year, right? So if you compare that to the UK or somewhere like Singapore or something like US, that's really expensive. So, bottom line is that even if you can afford or if you can access home financing, it's very hard for you to afford it. And that's why, there needs to be other alternative solutions for, millennials, for young people, for a lot of people to actually be able to access the property market itself.
So which are exactly this solution? Which kind of services does Homebase offer and how do they work?
Yeah. So, we started with this fundamental problem around home ownership and affordability. And what we realized is that, a lot of people, they can't even access the home loans, right? So how our core business is called Buy Within Summit. How it works is that customers would come to us with a property they have in mind. We would actually have an internal valuation team that actually would go to the property, make sure it's safe, make sure it's actually, there's no valuation or legal issues. We would actually buy the property fully under our name in the very beginning, right? So we actually can fully own out the property. We allow the consumer to actually live in it, rent it out as they please. They have a certain amount of equity in the very beginning, and then we structure a contract such that over time, over the next 5 years, 10 years, they slowly buy out more and more of the equity. And once they fully have bought us out, then we transfer the property back to them. So you can almost think of it as another way to actually finance the consumer in a very kind of risk mitigated way and allow them to actually access homeownership earlier on as well.
That's super interesting. I guess I'm just super curious, right? Because if you're buying these properties, that makes it quite, I guess, a cash intensive operation. What you're doing is that are you still able to grow quickly whilst purchasing these properties outright? What's the model around growth and building in that kind of big cash deployment model?
Yeah, no, that's a really great question. I mean, I think that's definitely one of the challenges with these kind of like PropCo, EPCO models. There's a lot in the
Mm,
US as well. And in the beginning, it was the same thing, right? In the beginning, when we had to raise the first round of funding, we had to use a lot of that cash to actually prove out the model, right?
yeah.
And deploy it to actually show to investors that we could actually execute on this model and that, it actually makes sense from a financial standpoint as well. Over time, I think we've been quite lucky to partner with both very sophisticated investors on the capital market side,
Hmm.
both in terms of equity. So we have, investors like Y Combinator. We have, investors like Goodwater Capital who invested in our parent company. But we also have debt investors that we work with who are family offices, big, debt funds, institutional debt funds across Southeast Asia, across Europe, across the United States, who work with us on a debt basis as well, and even some local banks as well, that we partner with to actually facilitate these transactions, right? And I think, in the beginning it's very hard, obviously, because you have to prove out that you have a track record,
Yep.
and no one really trusts you to deploy capital. But over time, as you have more of a track record and you're able to
Mm,
show that your repayment history is good, your debt facilities actually scale exponentially as well. For example, there's a company that is quite similar to what we do in the U.S. called Divvy Homes, who have raised
mhm,
1.5 billion dollars from the likes of Goldman and Blackstone on the debt
yep.
side, and that allows them to scale and work with thousands and hundreds of tens of thousands of families basically. And for us, that's our goal as well.
And I'm just wondering, how do you mitigate the kind of, I guess, the credit risk of someone like paying you back for the purchase of a property that you've purchased outright? How do you ensure that that person is, I guess, verified they're going to pay back for the property in the end?
Yeah. No, that's a really great question. I think for us, we have a pretty intensive due diligence process in every single deal and every single customer we work with. So we would actually evaluate both the property itself, because in an
Hmm.
emerging market like Vietnam, there's a lot of systematic risk on maybe you're buying a certain property, but it has the wrong zoning, or the
Yep.
developer, even if it's a apartment, right? The developer maybe didn't build it correctly. So we have a legal team and a due diligence team that evaluates every single property, but we also have a kind of a credit and risk team that evaluates every single consumer as well. And for us, because we're a little bit more flexible than most other solutions, we work with people from across the board, right? So we'll look at their incomes, we'll look at their job histories, their savings, some of these basic factors, but we also use tech to actually have a underwriting model on every single consumer, and that will determine exactly how much we're actually able to kind of finance their transaction, and what are the kind of the limits of the terms that we're able to do over time as well. So in turn, with both of these, hopefully we can mitigate some of the risk. And I think a lot of it is just like lessons that you learn, right? Because
Mm,
a lot of the
yep.
transactions in the beginning, right, we thought we cover all the bases, but inevitably something comes up, so you add it to your underwriting model and you get more and more accurate over time as well.
Did you have any unpleasant stories or something like not really nice that happened, or a successful story to share with us?
Yeah, I think I shared this on maybe some other podcasts before, but one of the earliest challenges for us was actually the founding story, the founding team, right? And I think there's a very common, trope that Y Combinator, the world's probably most famous accelerator that we went through, right? That they say,
Mm,
which is in the beginning, it's not your competition, or it's not, the market that actually kills your company, right? In the beginning, it's actually most likely the co-founder conflicts, right? It's the people on your team that they don't
hmm.
work well together, and then think basically things fall apart. And that's actually almost
Yep.
exactly what happened for us as well. So in the beginning, we actually had three co-founders, and we also had
Yep.
met in Singapore at this basically venture capital fund. And when we were raising our seed round of funding after we had the initial concept, the initial idea, we were pitching investors, right? And these kind of days are very, very intense because you're pitching 8 to 10 investors every single
Mm,
day, everything from family offices to venture capital funds to angel
yep.
investors, people who can actually add value to your business. And so in the middle of this fundraising, maybe we already closed half the round, so things were going pretty well. But we met this angel investor who actually looked at our team, and then he actually ran a due diligence, like a background check on all of our team members, right? He came from a sovereign fund background, so he was a little bit more strict on the diligence aspect of
Yep.
things. And after he ran this
Hmm.
check, right, he found out that one of the team members, so not me and my co-founder, but the other guy that we were working with at that time, he had popped up on this government database of financial crimes. And he actually told me and my other team member,
Whoa.
and
Okay.
we were just
Yeah.
shocked because, this is a guy, yeah, this is a guy that, we had worked with, hand in hand, seen every day basically for the past several months, right? And, he was very,
Yeah.
very well spoken and very smart as well. And this guy was like, yeah, like, this investor basically told us that this guy actually had been convicted of a felony. He was working for a bank. He had actually misappropriated some client funds. And then because of that, the
Whoa. Okay.
monetary authority of Singapore actually sent him to the jail basically for 11 months, right? And then after he was released from prison, basically, he couldn't serve on the board of any directorship of any company or something like that for the next 20 years, or some
Yeah.
consequence like that as well. And so we were shocked basically, right? Because again, this is a guy that we had worked with. And
That's
so
crazy.
after
That's
we
crazy.
received this news, yeah, yeah. So after we received this news, my co-founder and I actually confronted this guy, and he was actually still denying it. But all in all, then we actually had to go back. We
Yeah.
actually did more research, and we found an old resume that he had, which had his exact picture and also the employment history of this bank at this exact same time that the press release said. So it was pretty undeniable, right? Um,
How did you deal with that? Like, how did you resolve I guess he or she had probably had some equity. Like, how did you kind of handle that situation?
Um,
Yeah.
Basically, after
Yeah.
all of this, right, we actually had to confront the guy and, had a very honest, down to earth conversation about, what happened here. Ultimately, we decided to part ways. But because at that time we were raising our seed round of funding, we actually had to also inform all of the investors. And a lot of people actually pulled their money. They pulled out of the financing round. And, keep in mind that at that time, it was very, very early stage.
Whoa.
So it was just me and
Yeah.
my co founder. And, we just had this idea of what we wanted to do. And on top of this, you have this stain on your reputation. So a lot of the more institutional venture capital funds, they don't even want to talk to you, right? So we then had to basically just hustle our way into messaging people on LinkedIn, and just try to collect very, very small checks, 5K, 5K here, 10K here, and slowly build up kind of that traction, that momentum. And then we close our pre-seed round. With that money, we were able to then validate the business model. We did some transactions. We then got into YC, and then the history is from there, right? But it was still a very,
Mm.
very hard challenge, just because in the beginning, you don't have anything, right? And if something like this happens, it's just very easy to actually say, oh wow, like there's no business here, right? And I should just be doing something else. But I think for
Mm.
us, the lesson was that if you actually persevere and you actually get through these, you can handle any challenge, right? And for us, I think even to this day, that was probably the
Yeah.
hardest thing that actually ever happened to us as well.
Which trends do you see in this industry in the future? And do you see this also maybe in Europe, America, or is it mainly like focused there?
Yeah, that's a really good question. I think, there's two sides of the equation. I think on a macroeconomic perspective, there's a lot of interesting things that are happening in Southeast Asia and especially in Vietnam. So, a lot of people actually compare the Vietnam macroeconomic environment to something like China maybe 10 or 15 years ago, right? And I think you guys would be very, very familiar with kind of the manifestation of China, 10 years later, something like that, right? But,
Yep.
a lot of the fundamentals are there, right? Where you have 6 to 7% economic and GDP growth every single year for the past several years. Inflation here is relatively low. It's a very young country as well. The average age is around 30 to 31 years old right now, and it's actually a very fast growing middle class. So I think BCG did a
Yep.
study where it says by 2030, around 30% of the population will actually be in that middle class bracket, right? And
Yep.
when you look at these kind of macroeconomic factors, a lot of them have implications on the consumer finance economy, but also in terms of property ownership, real estate ownership as well. It's very similar to China in the sense that real estate ownership is one of those cultural elements as well, right?
Hmm.
So for example, if you're a young guy, you want to get married, buying a house or buying property or buying an apartment is absolutely necessary, right? Because it's a
Yep.
point of
Yep.
pride in your family, right? But also
Mm.
in regards to the financial appetite of young people here. So maybe there's not so many, I guess, investment options, but the traditional ones are twofold, right? It's real estate and
Mm.
gold. And, for a lot of people, those are probably the more traditional asset classes. And even today, I think around maybe 70% of household wealth on average is concentrated in real estate. So with these kind of fundamental factors, we do see there's a very, impressive opportunity for, consumer
Mm.
finance companies, for real estate companies, for those kind of things to actually, have some kind of disruption or innovation in the market as well. I would say on the more technology side of things, it's similar to the US, but maybe a little bit slower, right? In regards to the
Yeah.
progression of how things have been going. So, if you look at the US and specifically PropTech, right, real estate technology
Hmm.
companies, I would say that there's been three kind of waves of innovation. So the first one, which I think also manifests in Vietnam, is a lot of these property listing platforms or portals, right? So you
Hmm.
go up, you find or buy and sell, rent a property, and it's very easy to do there. On the
Yeah.
second wave, there's a lot of maybe co-living companies, co-working companies that have disrupted the market. There's also a lot of these digital brokers. So, for example, if you are a consumer who want to buy a property, maybe you'll go to these and they actually equip agents with technology to better serve the clients, right? And
Hmm.
then
Yeah.
for us,
Yeah.
I would say that we're very operating at our kind of this forefront of innovation here in the market in terms of trying to make consumer lives better, right? What we're doing here is we're actually helping consumers access financial services. So, we can promote this theme of inclusion, right? The
Hmm.
financial inclusion, whether it be on the ownership aspect of real estate, so they can actually now own assets, they can live in them in a more flexible manner, but also on the investment side, right? So, you can actually participate in one of these really, really impressive and really incredible wealth generating opportunities that you actually see
Is
happening here as well. Yeah.
it sounds a bit like you're creating, I guess, REITs. Is that a product you are looking to kind of offer in a way, or is that have I mischaracterized it?
Yeah, I mean, I think REITs definitely falls into that third bucket of innovation. It is
Mm.
something that we have and are looking at for sure, whereby it combines a lot of these aspects of democratizing financial access to something like real estate,
Yeah.
but also has a very strong capital markets component. And I think for us, over time, we've been able to develop core strengths on all three aptitudes, right?
Yeah.
Whether it be on the technology aspect, on the finance capital markets, because we have this international experience and background working with funds and capital providers across the entire world, and then also on the real estate aspect here in Vietnam as well.
Do you ever have, I
Interesting.
guess, in China, I guess I'm seeing this sort of phenomenon in the cities, at least, where you have insane property valuations, but the rents relative to the property valuations, if you compared it with, say, London, is actually quite a low yield. Um,
Mm.
is that happening in Vietnam, or is it very much more the kind of what's happening in London, where you have high property value, high rent?
Yeah, that's a good question. I think both actually have grown over time. So if you
Mm.
look at benchmark rental yield for, let's say, apartments here in Ho Chi Minh
Hmm.
City, maybe it's around 4 to 5% or 5 to 6%, depending on the area, right? For landed property, it's probably a little bit lower, from 1 to 3%, depending on the area. So, you have that phenomenon, right? But I think a lot of it is, fundamentally, it's driven by a lot of the same macroeconomic factors that you see in more developed economies, right? In a place like London, or same thing like in Vietnam, right? Ho Chi Minh Center here it's probably the biggest city in Vietnam. We have around like 10 to 11 million people here, but it's
Yep.
also the center of the GDP growth. It's a center of innovation, of finance, of a lot of the multinationals have headquarters here as well. In Hanoi, same thing, but these two like kind of tier one cities, I would say, are the talent magnets for all the
Yep.
young people, right? So because there's so much opportunity here, when you see this macroeconomic trend of urbanization, it's where all the young people are moving, right? So even if they can't afford property, they need to rent, right? So you see
Mm.
rental prices going up over time as well. But yeah, I would say that because of how fast both rental prices and how fast the actual underlying prices are going, right? That's where you kind of need to have solutions that kind of go beyond the traditional gamut of traditional finance as well.
Super interesting. And to conclude, Philip, to like according to your experience and starting from possible issues with co-founders and your experience at YC, which piece of advice would you give to young graduates who want to start their company, or yeah, especially maybe in the real estate industry?
Yeah. I think the biggest piece of advice to, young entrepreneurs honestly is just to do it and take the leap of faith.
Mm.
When I reflect back on the past several years of building Homebase, there's been so many ups and downs, right? So many challenges that I never would have even encountered, right? Who knew that you could work with someone who would be a convicted felon and then have to go over that and then, navigate a company through
Gosh.
COVID and,
Hmm.
raise millions and $1 million of capital and manage a team of, 70, 80 people, right? Like those are always challenges that I never would have even expected. But, when you actually look back on your journey, it's just one of the most fulfilling aspects of things, right? And I think, entrepreneurship teaches you not only the process of starting a company, but so much more about ownership, about a lot of these lessons in strategic planning, about, managing resources, about coaching, about being a leader and coaching
Yep.
people, right? And I think, even if you, let's say, do start a company and it doesn't work out or if it fails, you can always go back and find another job, right, in a big company. And yeah, I think that kind of experience is just so valuable for employers to see as well. So yeah, overall, if I had to give back, go back and give myself advice, right, I would just say, just do it, right? Take the leap of faith.
Just do it.
Just do it, right? Yeah, just do it. Take the leap of faith, and you won't regret it. So yeah, that's the advice I would give. Yeah.
Well, Phillip, that's all we've got time for today. But thank you so much for joining us here today. It's been an absolute pleasure.
Awesome. Yeah, really happy to be here. Yeah.